Welcome to Investor Copilot. I am Viraj, and today we will look at some statistical information and some numbers which will help us understand concepts like inflation, consumer price index, and purchasing power even better. We will also relate these concepts to self-directed investing, and we will see why it is important to grow your money in Canada. So let's get started. Now we are on the Statistics Canada site, and on this page, the most important indicator is this card that we see on the right. It shows us the CPI, the Consumer Price Index, for the month of October 2023. Now, mind you that we are recording this video in December 2023. However, the information is updated only till October, so we will look at the most current information. It shows that CPI has risen by 3.1% over a 12-month period. So that is the major indicator that we have here. Now, let's switch to the next page. Now, there is a lot of information on this page. This is a tabular format to show the exact rise in CPI month over month. So let's go through this. I have selected the geography as the whole of Canada. The reference period is October 2022 till December 2023. However, in the following table, we see that data from October 2022 through to October 2023 is shown. So we have a 12-month period here, and these are the numbers which relate to CPI. So the baseline here is 2002, and CPI is marked as 100 in this year, and this is the starting point for all these calculations. So you see a header here for the products and product groups. All items, October 2022, it was at 153.8, and October 2023 is at 158.6. So there is a 4.7, that's a numerical difference between these two figures. Now, how to interpret this? The rise in consumer price index, the increase in consumer price index is the percentage difference between this number and this number. So that is the important point to understand that we should not calculate the absolute difference between these two numbers, but the percentage difference. And that is how the number, the percentage of 3.1, which we saw in the earlier page, was arrived at. So we can look at a lot of products and product groups, and this is a granular chart where the inflation in food, which is quite steep, as you can see, 175.2, and now it's 185, so almost 10 points up. Shelter, 166.2, and it's also more than 10 points up. We see a lot of inflationary figures. All items excluding food and energy, they've gone up 5% as well. Similarly, other items as well. You've got energy, which has declined because gasoline prices have declined. Transportation and gasoline numbers are fairly good for Canada, and that's a good news for us. But apart from that, most of the other products and product groups have risen in price. That is what this table shows. So this is an important marker, and this is a important piece of information in understanding CPI, understanding consumer price index, and inflation rate. Now let's look at the next chart. Now we will switch directly to the percentage table. All items CPI had risen by 4% in August 2023 percentage change, and it has risen by 3.8% in September 2023. So this is a 12-month percentage change. Please mind that. Now, the important point that I want to make through this chart is that the most pressing needs, the immediate and unavoidable expenses are for most people food, shelter, transportation, health and personal care, and to a certain degree, I would say entertainment, recreation, and something like that. But food, shelter, transportation, and health and personal care are like inevitable, very important expenses. And we see that the 12-month percentage change through these four categories, which are major expenses for everyone, is at least 5.5 to 6%. It is between 5.5 and 6%. What it means is that if you have, say, $100 to spend each month as a notional figure on these four things, 12 months down the line, your $100, the worth of that money is going to be around $94. So you have $6 less automatically in the next 12 months. That is what this percentage change means for you and everyone else. This is some more breakdown on food prices. So as you see, the figures here, the numbers stayed true to the 6%, 7% mark that we were talking about. And that is why looking at inflation and looking at consumer price index is important. Now, the point I'm trying to make here is that the goal of self-directed investing is to grow your money by short-term trading, short-term investing. However, it is important to understand that in Canadian market, in this country, you need a growth of at least 12% to not only preserve your capital, but at least get a growth of 5 to 6%, taking into account the CPI, the inflation rate. So that is something that is vital to understand. Let's say that you park your money in a GIC and the GIC gives you 4.5%. With 4.5% or 5% even, that kind of growth, you will not beat inflation rate. You will not beat inflation rate and your money will decline. Your savings will decline in value 12 months down the line. So something like a GIC or completely passive investing doesn't really suffice your investment needs. You need to grow your funds more aggressively so that your capital is preserved and you get at least some sizable growth so that it adds back to your funds or you can spend that money. That is my main motive in putting out these figures regarding CPI and inflation rate so that you understand that you need at least a 12% growth at a minimum, 11 to 12% to really see your capital grow over a long term. And it is very important. So please keep that in mind. We will look at more such statistical data later on as well. Thank you very much.